Welcome back to Investing Talk podcast. We're thrilled you're joining us today for another focused look into the market. Today, we're zeroing in on a company that's been making, well, significant waves in the AI infrastructure space, CoreWeave. The big question on many investors' minds is CoreWeave a good time to buy now? We've sifted through the sources, market analyses, company news, to bring you the essential insights and hopefully help you navigate this complex picture.
That's right. Our mission today is really to provide a comprehensive, unbiased overview of CoreWeave's recent journey, its fundamentals, technicals, and what might be on the horizon. We'll look at the data, try to connect the dots, and highlight what truly matters for anyone considering this company, all based on the material provided.
Before we jump into the details, if you find this conversation valuable, please take a moment to hit that subscribe button, like this video, and maybe leave us a comment below. Your feedback helps us immensely. And hey, if there's a specific company you'd like us to look into next, drop its name in the comments. We definitely love hearing from you. Okay, let's get started. So, CoreWeave, it's been a fascinating story, showing some pretty sharp volatility recently. What's been the driving force behind those intense price swings in the past few months?
What's truly fascinating here is how CoreWeave doesn't just reflect, but it almost amplifies the broader AI infrastructure market's intensity. It's really something. Over the last 3 months, we've seen aggressive expansion, some key acquisitions, and increasing competitive pressures. All these things have been contributing to significant, sometimes really dramatic stock movements. It's definitely a high-stakes game they're playing.
Let's maybe trace that journey month by month, starting with September 2025. It sounds like September brought a bit of a rally. Was this a true turnaround, do you think, or maybe more of a short-term reaction that investors need to be cautious about?
September, yeah, it definitely brought a sigh of relief for some investors. On September 9th, the stock surged over 7% pre-market, impressively breaking that $100 per share mark. Now, this wasn't just random noise. It seemed like a direct reaction to some aggressive cost-cutting measures and also strategic growth pivots the company had put in place. Crucially, this came after a pretty brutal summer sell-off where shares had plummeted, more than 55% from their June highs. So yeah, it was a bounce, but definitely from a deeply oversold position.
Okay.
And adding to that positive sentiment, CoreWeave also announced a new venture capital arm, specifically designed to invest in promising AI startups. That news alone lifted shares by about 4.5% intraday. It sort of signaled the company's ambition to not just provide infrastructure, but to actively, shape the next layer of AI innovation.
Right, shaping the ecosystem. So a strong rebound, perhaps reflecting some renewed confidence in their strategy. But stepping back to August 2025, that sounds like it might have been a much tougher month. It paints a very different picture, right? What was happening then that really seemed to spook the market?
August tells a distinctly different story, yeah.
Yeah.
More challenging. We saw pronounced selling pressure hit not just CoreWeave, but other leading AI infrastructure stocks too. Think Supermicrocomputer, for instance. The overarching sentiment was just a decrease in general market risk appetite. So CoreWeave shares ended August well below their early summer highs, and that reflected this widespread market unease about the sheer capital intensity required in this space. Massive data center buildouts, constant hardware praise, and also the ever-shifting competitive dynamics. Beyond that, there were investor concerns bubbling up around executive decision-making and maybe perceived over-aggressive expansionary risk-taking. That led to wider scrutiny of CoreWeave's growth model throughout the month. This impacted both short-term sentiment and, importantly, longer-term institutional positioning too.
And looking even further back to July 2025, what key developments then kind of set the stage for all this volatility and the subsequent scrutiny?
July brought some pivotal strategic moves, and naturally market reactions followed. CoreWeave announced its intent to acquire OpenPipe. Now, that was a move aimed at vertically integrating AI model hosting and inference capabilities. On the surface, it sounded like a smart play, right?
Yeah, makes sense.
But analysts were immediately divided. Would this really give CoreWeave a sustained hardware-software edge? Or would it just introduce further financial risk, effectively piling on more complexity and capital demands?
Right, the integration challenge.
Exactly. And simultaneously, we observed several large institutional holders disclosing partial reductions in their CoreWeave exposure. They cited profit-taking after what they called a scorching first half of 2025. Even though there was actually a modest bounce in the share price into late July, it suggested some of the smart money was already, de-risking a bit.
Okay, that's a clear picture of the market's recent dance around CoreWeave. A lot going on. But beyond the headlines and the sentiment, What do the core financials and the competitive landscape tell us about CoreWeave's fundamental health, its actual position? Because that's where the real story often lies, right? Especially in a sector driven by, well, big promises.
This raises an absolutely critical question about transparency. It really does. While the sources provide some strong indicators, there are also significant data gaps that any investor should be acutely aware of. We do know CoreWeave reported strong Q2 2025 results, with a significant increase in revenue. This clearly highlights robust demand for their cloud GPU offerings, driving both sequential and year-over-year acceleration. So the top line, it looks healthy.
That strong revenue growth certainly sounds positive. I mean, it aligns with the booming AI sector. But you mentioned significant data gaps. What exactly is missing, and why does that matter so much for a company in this kind of high-growth, capital-intensive industry?
Well, here's where the picture gets less clear, significantly less clear. The available public summaries, unfortunately, do not provide specific net income, operating margin, or earnings per share figures for Q2 2025. This means precise trends or comparisons to prior quarters for profitability are basically impossible to determine.
Wow.
We can see the revenue coming in, sure, but not how much of it is actually translating to profit.
Which is kind of fundamental.
It is fundamental. And crucially, no explicit future earnings projections or updated guidance were published in Q2 2025 earnings or recent investor communications. And perhaps most importantly, there's no available balance sheet or cash flow data in the current public sources we looked at. This means aggregate figures like total debt, cash on hand, or current ratios, which are vital for understanding a company's financial stability, simply cannot be confirmed.
So you can't see their debt load or cash burn.
Exactly. For a company in a capital-intensive sector like AI infrastructure, not seeing how they're funding growth, managing debt, or generating free cash flow, it's like trying to drive a car at high speed with, I don't know, no fuel gauge or oil pressure light. It's risky. It forces investors to rely almost entirely on that top-line narrative rather than foundational strength. What we do know, for what it's worth, is that as of September 2025, the company had about 370.5 million shares outstanding.
That's a powerful analogy. It really highlights how crucial that missing information is. So with strong top-line growth, but this significant lack of detailed financial transparency on the bottom line, how does CoreWeave actually stack up against its, well, formidable competitors?
Taking a step back from the financials, it's important to understand CoreWeave's position within this very heated market. They're definitely seen as a fast-scaling, vertically integrated cloud GPU provider, specializing in AI, machine learning, high-performance compute. They've effectively positioned themselves as, a top alternative to the hyperscalers.
The big guys. Amazon, Google, Microsoft.
Exactly. Those dominant global cloud providers. CoreWeave is expanding aggressively with new data centers. And they have secured significant customer wins in AI training and inference, which, that does speak to their operational capability. They claim advanced networking capabilities and key partnerships, like with NVIDIA, as their competitive moat.
But can they really compete long-term with the giants?
Well, that's the elephant in the room, isn't it?
Yeah.
They face major competition from those tech giants who possess established global footprints, virtually limitless capital resources, and often their own custom AI chip development efforts. It's a formidable challenge to carve out and maintain a real sustainable edge against titans like that.
Here's where it gets particularly insightful, I think. Beyond the company's reported fundamentals and market positioning, the market itself often whispers signals through its price action. What has CoreWeave's stock behavior, especially movements from insiders, been telling us recently? That can often give us a very different kind of signal, can't it?
Absolutely. And even with limited public chart data, the technical analysis suggests a highly volatile stock, one that's heavily influenced by insider activity. August 2025, for example, saw really notable volatility. It was marked by large insider sales and high short-term trading interest. While precise, real-time chart data isn't always public for these things, the sale notices themselves indicate a likely price range of maybe $65 to $80 per share during that period, though some block sales even averaged around $91.85, which just shows how quickly prices could swing.
So big swings, any sense of support or resistance levels?
Well, with insufficient direct chart data, it's hard to delineate precise support and resistance levels confidently. However, those repeated insider share sales at levels above $90, that likely suggests a significant resistance point the stock has struggled to break cleanly through. Overall, the stock is exhibiting high interim volatility, which, is pretty typical for newly listed high-growth tech shares, especially those with significant insider selling activity and a relatively limited public float.
You mentioned insider selling that often catches investors' attention, and usually, well, not in the positive way. We've seen a lot of headlines about this with other companies. What exactly are we seeing with CoreWeave here, and how significant is it?
This is a significant factor. I mean, prospective investors should absolutely be aware of this.
Hmm.
We're observing heavy insider selling. Multiple founders and executives have filed Form 144s. Those are notices of intent to sell restricted stock, basically. And they're for large blocks of shares in both August and September 2025. For instance, there was a proposed sale of 250,000 shares for over $25.7 million just on September 2nd. And in August alone, an aggregate of 1.25 million shares were sold for over $114.8 million.
Wow. That's a substantial amount of shares and money changing hands, a really large amount. For those of us looking at this from the outside, is there any way to interpret this positively, or should this level of profit taking always be considered a major red flag, especially for a company in CoreWeave stage, given that lack of financial transparency we just discussed?
That's a fair and critical question. Look, this concentrated insider selling, particularly without any offsetting insider buying reported, it's arguably far more than just routine profit-taking after a lockup expiry, which is when initial investors and insiders are legally allowed to sell their shares. In a company like CoreWeave, which, let's face it, thrives on narrative and top-line excitement, but lacks that detailed financial transparency, such activity can signal a critical divergence. Those with the deepest insight, the insiders, are cashing out, potentially before the market fully scrutinizes profitability or the sheer capital intensity or maybe other underlying issues.
So it shifts the perception.
It can, yeah. It shifts investor sentiment maybe from high-growth opportunity to high-risk liquidity event. We've seen similar dynamics play out with other high-growth companies in the past, where a torrent of insider sales became a precursor to a significant reevaluation of its growth path. Now, it's not always a definitive red flag, but the magnitude here, combined with the opaque financials, makes it a serious data point for any investor to consider. And on a related note, it's worth mentioning the sources didn't provide any explicit analyst ratings or social media sentiment data, which would typically help round out this picture.
Okay. So we've got a company in a booming sector, strong revenue growth on the surface, but serious questions around profitability, transparency, and now this heavy insider selling. What does all this mean for the road ahead? What are the key events and potential risks investors should really be tracking for CoreWeave in the coming months and years?
Looking forward, CoreWeave's trajectory will hinge critically on its execution and how it navigates this very dynamic market. This raises an important question about how future events will interact with these current challenges, especially given those data gaps we've talked about. In the short term, there are several scheduled catalysts to watch. The Q2 earnings report is expected September 18, 2025, and Q3 preliminary results are expected in November 2025. These will be major inflection points. Analysts and investors will be scrutinizing top-line growth, sure, but also margin trends and the return on investment from acquisitions like OpenPipe.
So those earnings calls are key. What else?
Well, market events like the major index ETF rebalancing on September 29, 2025, and the institutional 13F filings due on November 3rd, these are quarterly reports where large investment managers disclose their holdings. These could also create significant volatility based on CoreWeave's standing among major funds. Are they buying, selling, holding? And there's an AI Infrastructure Day update expected October 14, 2025, that could bring new product launches, maybe partnership announcements, potentially resetting the narrative. And honestly, we should probably anticipate continued potential for more volatile price moves due to possible additional insider selling as lockup periods expire and just ongoing news flow about AI infrastructure demand in general. That's a busy short-term calendar for sure. But what about the longer-term picture? Are there structural tailwinds that could provide strong support for CoreWeave despite these immediate concerns and the risks we've outlined? Absolutely. For long-term catalysts, the structural industry growth is undeniable. Growth from large language model providers, enterprise AI adoption, high-performance compute workloads, these are significant tailwinds. CoreWeave is squarely positioned in this area. It's essentially, selling shovels in a digital gold rush. There's also potential for new, impactful partnerships or acquisitions down the line. CoreWeave continues to focus on partnerships with chip makers like NVIDIA. That's crucial. There are also rumors suggesting potential strategic partnerships with Tier 1 cloud providers, maybe large government AI contracts for classified projects, and perhaps further bolt-on M&A activity in areas like AI chip optimization. These could certainly solidify their market position and drive future growth if they materialize.
That paints a picture of substantial upside potential, definitely. But to balance that out, what are the most critical risk factors that could realistically derail this growth story, or at least significantly temper investor enthusiasm? I mean, what's the biggest risk that maybe keeps you up at night regarding CoreWeave?
The risks are equally significant, I think. And for me, it really boils down to the execution risk combined with that lack of transparency. That's the most concerning part. On the stock-specific side, that heavy insider selling we discussed is a major concern about conviction from those who know best. CoreWeave also faces substantial execution risk just as a rapidly scaling infrastructure company, particularly in things like data center buildouts, hardware procurement in what's a very competitive supply chain, and just scaling operational capacity effectively. This isn't a software company that can scale with a few lines of code. It's physically intensive, capital intensive.
Right, it requires huge investment.
Huge investment. And there's also potential customer concentration risk. If they have a few very large deals, losing just one major client could significantly impact their top line.
And broader market risks.
Yeah, moving to broader market and sector risks. The entire AI and cloud sector is susceptible to macroeconomic shifts, cyclical IT spending patterns. And just rapid competitive changes. Commodity hardware pricing could fluctuate, supply chain issues could pop up, or even technological disruption by the larger, better-funded competitors. Those are all external risks that could really impact their profitability or growth trajectory.
And finally, there are some, albeit unsubstantiated, reports hinting at potential leadership shakeups or maybe board-level pressure for more capital discipline, which could just add another layer of uncertainty to an already complex situation.
So after all this thorough analysis, the market gyrations, the promising top line, those critical financial gaps, the insider activity, the catalysts and risks, what's the overall picture for CoreWeave right now for someone considering investing? Is it a good time to buy, or should caution really prevail here? If we weigh all the factors from the sources, it's a very, very nuanced situation. It's definitely not a clear buy or sell. We'd probably lean towards a neutral stance, maybe a 5 out of 10, something like that, acknowledging both the significant upsides and these considerable, perhaps underappreciated risks. The positives are clear. CoreWeave is demonstrating rapid revenue growth. It is strategically aligned with the high-growth secular trends in AI and cloud compute. That positioning is undeniably strong and certainly appeals to the growth investor mindset.
But the
negatives are substantial. The most significant concerns are that glaring lack of published earnings and detailed financial disclosures. We simply don't have a clear picture of profitability, cash flow, or balance sheet health. That's a big problem. This, coupled with the substantial insider selling and the very high stock volatility, presents notable risks for new investors. The absence of specific, unbiased analyst coverage and clear reported profitability are further drawbacks. Ultimately, that critical absence of publicly available balance sheet and cash flow statements severely limits the ability to form a truly high-conviction rating. It remains a speculative growth story in many ways.
Given that nuanced assessment, that 5 out of 10, how does this translate for different types of investors? Say, someone looking short-term versus long-term.
Right, good question. For short-term trading, the stock could be suitable, but really only for highly experienced, risk-tolerant traders. Traders who can stomach its extreme volatility and are closely watching those upcoming catalysts we mentioned. It's definitely a high-risk, high-reward environment, but those risks are significantly elevated by the insider selling and the lack of clear technical support levels. Now, for long-term investment, it's generally not recommended at this point, not until more complete financial disclosures become available. We need to see verified profitability data, clear cash flow statements, visibility into long-term margins. The execution and competitive risks remain just too significant for a buy-and-hold approach right now, making it a challenging proposition without far more transparency. You'd essentially be investing on faith in the narrative without the solid financial bedrock to really support it over the long haul.
So in essence, we have a company perfectly positioned in a red-hot sector, showing impressive top-line growth, but crucially lacking the detailed financial transparency that typically underpins long-term investor confidence. And on top of that, showing signs of significant insider profit-taking. It's certainly a nuanced, maybe even high-stakes situation for anyone looking to enter now.
Absolutely. Couldn't have said it better. The rapid pace of change in the AI infrastructure space just means continuous vigilance and a critical eye are essential. Understanding the catalysts, both positive and negative, alongside the underlying financials, or in this case, the lack thereof, is really key to navigating these opportunities successfully.
For you, our listener, the big takeaway here is probably that while CoreWeave is riding a powerful wave in AI, Its short to midterm trajectory will likely be defined by its ability to execute profitably, integrate acquisitions successfully, and land those major client deals, all against a backdrop of likely persistent market volatility. Decisive execution on leadership and capital stewardship will be absolutely pivotal for its stock performance in the coming months. What stands out to you from this conversation? We encourage you to reflect on that question and consider how these insights shape your own investment framework. Thank you for joining us for this analysis of CoreWeave. We hope this has given you a clearer, more informed perspective. Don't forget to subscribe, like, and comment with your thoughts or any companies you'd like us to cover next. Until next time, stay curious and keep learning.